Basically, what I'm going to tell you is that if you see Bitcoin breaking through that structure, you can only expect a very aggressive downward movement. And this is what we told you in the latest videos of Crypto Insight, since this compression of Bitcoin against such a relevant level, and seeing that it already been pierced with strong aggressiveness, everything pointed to us working on that flat pattern you just saw, and the consequence was nothing other than considering that bullish climactic action finished. So let's take a step back and look at the Bitcoin chart on its daily time frame. And as you are observing, after this strong bearish impulse, Bitcoin has gone to seek the origin of the breakout. An origin of the breakout that, as we just saw and zooming in a bit, has just confirmed the structural loss and all that it implies. Remember, on the one hand, we were also analyzing the institutional target of this whole bullish accumulation process, which led the price levels in a surgical way exactly to where Bitcoin has taken us. All of this when crossed with the fact that we were visiting the origin of the breakout that initiated the bear market. We had all the ingredients in the cauldron to prioritize that bearish view on Bitcoin. And yes, this right here is a cauldron. And now, if we cross the analysis with Ethereum, we will realize the following. In the case of Ethereum, we have been working on this structure of an uptrend channel, which we identify by its alpha working angle. In this way, we were already visualizing how it was very plausible, and zooming in on this area, that in the Ethereum price, at the same time Bitcoin reached that macro institutional target, creating a trap above the origin of the breakout. So, we were visualizing how Ethereum, at the same time, was working on the classic bullish trap whose end, presumably and surgically, was going to be at the top of the uptrend channel. It's for no other reason, and moving to the 1 hour time frame, that when Ethereum was in this zone, we were visualizing this creek at a very, very relevant level. By this level, when the price was in this area, we were betting on a visit to the creek before starting the fall we have witnessed and are experiencing in the crypto ecosystem. And Ethereum does the same. We will see if they want to go in a double bullish impulse to seek the origin of the breakout as a flat pattern before breaking, and if the bearish continuity will only continue. As you have seen, the fall has been really aggressive, and going back to the daily time frame with Ethereum, now you have to be observing how we are following that structure, because in the end, it's that boundary zone that will define us in the future, the potential crypto bearish continuity. And as many members of the Crypto Insight community have asked us to analyze and cross-reference with the American indices, let's see then how relevant it is. The S&P 500 is now at all-time highs, and how it can affect Bitcoin and all cryptocurrencies. As you know, in the past videos of Crypto Insight, we were analyzing the S&P 500, the Nasdaq, with some frequency. I must say that in the crypto ecosystem, we were pioneers in the need to bring these types of assets, as weeks later other cryptocurrency channels began to do the same. And in the same way, we were pioneers in stopping bringing it. In the end, our opinion regarding the correlation between the traditional and crypto markets has evolved over time. And now you are looking at the Bitcoin chart superimposed on the S&P 500 chart, the quintessential American index. I want you to notice how the correlation is not extremely, let's find the right word, trustworthy. And we can say the same about the percentage difference in movements in the circumstance when such correlation exists. For example, in this second bearish swing of Bitcoin, notice how the SHIB 500 fell. It's nothing like comparing it with the fall of Bitcoin. So what we are seeing here is that on the one hand, of course, there are moments in time when such correlation is functional. But as you can see in the recent fall of Bitcoin and crypto, the S&P 500 has done nothing but rise. And since this example has been repeated dramatically and exaggeratedly, where such correlation has been completely inverse, it raises the following question. When should we pay attention to the S&P 500? In our opinion and the way we see it, it's quite simple. In those moments and circumstances where we find a logical correlation, that's when we'll be interested in checking the S&P 500 to trade cryptocurrencies. Second question, does that always happen? The answer is no. It doesn't always happen. Look, when we find it appropriate, we'll bring the S&P 500, Nasdaq, to the channel. Otherwise, we consider that it won't help us much and that we need it little or not at all. That being said, in my opinion, at this point, we are in a circumstance where, honestly, it doesn't seem 100% interesting to me to cross-analyze the traditional market with cryptocurrencies. However, as many members have asked me to analyze the S&P 500, Nasdaq, and oil, I'm presenting it to you. So, in the case of the S&P 500, at one point, we saw this bullish accumulation, which we strongly bet on at this point, that the traditional market had to rise, contrary to what the prominent economists were saying. Like, don't you see the CPI? Don't you realize there's a war? Have you noticed inflation? Don't you see how the market has to collapse? Well, Yes, when the prominent economist said that the traditional market should collapse, in Crypto Insight, we clearly saw the opposite. After surpassing the creek, doing the validation and the test, we now find that we have recently pierced another creek, a larger one, basically the white line. And now, many people say, hey, we're at all-time highs. Perhaps that's why members of Crypto Insight have asked me for this analysis, as it's noteworthy that it's at all-time highs. And here, I offer the following reflection. I know that for many, the fact that the price is at an all-time high is scary. There's a globalized tendency to think that when that happens, the market must fall. But I come here and invite you to consider the following. You are looking at the daily chart of the S&P 500 on the screen. Now, I ask you the following question. For the most part of the time that this chart represents, excluding, of course, the 2008 crisis, for the majority of the time that the S&P 500 has existed, it's a tricky question because it's quite simple. It's an index consisting of the 500 best-performing companies in the stock market. They detect those that start performing worse, take them out of the market, and introduce new ones that are performing better, creating a synthetic product with a high continuous and perpetual bullish bias. Certainly, this index cannot avoid global crises, but in non-crisis periods, it's a synthetic product designed only to rise. That being said, many investors fear all-time highs. Look, believe me, I understand, but now I want to invite you to consider the following. Notice how at this point we were at an all-time high, like here too, and here, and here, and here, also here, and here too, and here. Now tell me, what has happened? Is being at an all-time high something negative, perhaps? What has been the consequence of consistently being at an all-time high? Of course, it's scary, but look, it just keeps going up. So, considering that we are dealing with a synthetic product that has been born and built to rise perpetually, except during global crises, and also reviewing its history, we see that every time it's at all-time highs, the percentage of continuing to rise is really high. If you now ask me based on pure visual statistics and seeing how the price has been through an accumulation process, defended its defensive zone, broken the crick, validated the crick, and now being on a bullish excursion at an all-time high. If you ask me, for medium or long term, if we were already bullish and communicated this in Crypto Insight videos at this point, here we were already bullish. And here now we will continue to be so for a long-term perspective. Now I'll tell you what I think will happen with the Bitcoin chart for the medium or long term. But before, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Before going to Bitcoin, let's look at the Nasdaq chart on its daily time frame. Nasdaq consists of a stock exchange of the 100 highest performing technology companies in the United States. It's somewhat similar to the S&P 500, only Nasdaq only considers the technology market and operates in the same way. If one is not doing well, they take it out and bring in one that's performing better, thus creating a perpetual bullish bias. And here, I don't need to go off topic and repeat the 500 speech with Nasdaq, as we're essentially in the same scenario. Here, we are working on a bullish accumulation process where we were already long from this point here, and now we've pierced that trend line that suggests we will continue to be long despite breaking the all-time highs. For this idea to remain valid, we'll allow Nasdaq to visit the crick, perhaps with a slight trap, but then simply continue to rise over time. If we see that this fails, the plot will change. And the same goes for the S&P 500. We can give it some room if it wants to come and visit us at some point. The trend line, with a small trap, sure, but the bias will still be long. In the event that we see this event not being respected, as with Nasdaq, we'd need to reassess the situation and maybe things will change. But we are far from a critical situation for the traditional market. Everything is favorable. To give you an example of a critical situation, what would it be? Like the one we were in at this time, on a limit, in a defensive zone that must have been pierced. Be careful. Let's see who holds up the traditional market. This would be a critical situation. We are far from being in a similar situation. Now, let's quickly review oil. We are on a weekly chart, and I want to show you how oil is really in a macro range. Alright, we all know that no one wants high oil prices, as high oil prices greatly harm global economic productivity. Zooming in a bit, we'll notice how oil was compressed against a relevant level, which was the top of the macro oil channel. Here, it broke its creek and then experienced a bearish trend that provided some relief to global markets. Then, on the other hand here, we could have followed a crick that seemed to be breaking to go go skyward again, but these sellers didn't let the price rise at all. They created a defensive zone that gave relief to that trap over the creek, turning this narcissistic excursion into a long trap which strengthens the following. These sellers are heavily loaded on the short side. Here, they defend their position, and this ultimately is about an impulse from a channel that has ended up in a range with a trap, and they are now preparing to break a macro structure to seek a bearish climactic action. In this way, we would then be looking for the replication of this bearish impulse and see if they execute it soon. As you can see, we observe a favorable traditional market and falling oil. Now, looking at the Bitcoin chart on its daily time frame, notice how we give great importance to this breakout. It's 100 analyzable to expect a correction here. We'll see if it retraces to the breakout origin or even seeks some liquidity as a trap. But the idea is that this bearish impulse needs to speak and will want to reach its close relative. We support the idea of the previous bullish correction since Ethereum is in a very significant structure that suggests a minimal reaction. We'll see how long it lasts before breaking down and leading us to its crypto bearish path. Now tell me, what do you think about it? Do you think we're bearish, or do you believe we'll soon reach all-time highs? Leave your opinion in the comments. And if you enjoyed this video, let me know in the comments. Give this video a like, subscribe to the channel, and click the bell icon so that YouTube notifies you of future publications. Good luck in trading, and see you in the next one.